Rajiv Rajgopal joins us. He represents AkzoNobel. It's a rarity to get the management of AkzoNobel. So we are very excited to get him back on TV. Rajiv, good morning. Thank you for joining us. Before I get into specifics of AkzoNobel, what we want to understand from you is that why is there such a big and a marked slowdown suddenly in consumer discretionary, FMCG, paints? A quarter ago things were not bad, but within a quarter where we've not seen a global financial crisis, we've not seen anything disturbing locally, there seems to be a marked slowdown in all key consumer categories. What has gone wrong, and do you think this is temporary?
Morning, Nikunj, and warm welcome and good morning to everyone there. Really, if you look at, I've been watching the results of most of the companies in the consumer discretionary space, and you're right, there seems to be a bit of a slowdown. From AkzoNobel point of view, if you look at the quarter, revenue, this was a bit predicted. We've got different businesses in our paints and coating portfolio. If you look at our paints portfolio, we've had pretty healthy growth if you were to compare it with the previous years. Our focus really has been delivering the AkzoNobel vision of 15 by 20, and hence our real deliverable is really making sure that we deliver our profitability, which for AkzoNobel India had been a bit of a challenge in the last year. Our key mission was to get it back to a double-digit profitability by 2020. And we are on that mission. As far as the industry is concerned, yes, it's a bit tepid compared to the previous quarters. Is it a structural issue? Is it something that will last? If you really ask me, when I work the market and when I sort of meet customers, we think it could be a bit of a blip. Will it last for 1 quarter, 2 quarters is something that we are sort of closely watching. We see the growth coming still in some of the smaller towns, the mini metros. We see some sort of headwinds there. But really, you've got to really look at from a consumer discretionary. You typically see the industries which are in the forefront, which are typically in the white goods, actually starting to depict it first, and paints comes in much later. For us, really, if I were to break it a bit for you, we are seeing it more really in the part which is directly linked to real estate, which is our projects business, which we still are seeing growth, but yeah, it's been a bit tad lower than what we expected. The repainting part continues to be pretty strong, but yes, albeit a bit lower than what we had seen it, a bit earlier. I think we would need another quarter really to really understand, because for me to comment that it's because of monetary tightness in the market or liquidity crunch in the market, or whether it's going to be something which is structural, it's a little too early. We are keeping a very close watch. At this point of time, I don't think it's structural as far as the paints industry is concerned. Yeah, it's a bit lower, but I don't think it's something which is clearly alarming for us yet.
Great. So Rajiv, do us a favor and break it down for us. Let's come to your Q4 performance now. We know the kind of pressure that consumer companies are facing, and that's not just you, that's across the board. But tell me, how is it that you did in your individual segments, the decorative paints, industrial paints, etc.? And would you say that there was any particular category where there was extra or added pressure?
So, we don't sort of give out in terms of splits, but just to give you at a broad headline levels, as I mentioned to you, paints, we did see a high single-digit growth, so that's not a huge concern. In our coatings business, I think you've seen it, business like automotive and specialty, which is very closely linked to the automotive industry, has seen a bit of a softening. So yes, we've seen that in the quarter. But as I mentioned to you, the focus as far as AkzoNobel India was concerned was really improving our profitability, because that's something that we needed to do in line with our global vision. And we also chose to exit a few segments which were actually not adding to our profitability. So we only looked at those businesses which are accretive to our bottom line, and hence there's been a bit of a restructuring of our portfolio, a journey that I outlined to some of the investors that I had met. Will continue for the next 3 to 6 months. But yeah, we are very happy. If you frankly ask me, I think in terms of our profitability journey, we've started moving the needle. We've also, if you look at structurally, started looking at our power brands, making sure that we focus on our core brands of Dulux Velvet Touch, Dulux Powerflex in the paints portfolio. If you look at our powder coating, we've started seeing some initial good response. I think my belief is the team is doing a great job there. Our marine and protection perspective has had, after a tough year, has come back pretty strongly. Some of our businesses in our industrial coatings, which are linked to consumer discretionary, are still doing pretty well. So if I were to really break it down, yeah, it's been a bit of a mixed bag, but from our perspective, it was a chosen strategy. It's a strategy that I embarked on after getting onto the role of saying that we need to first improve our structural profitability before we start really going for growth. And really, we are going for growth in a profitable part of our business, which seems to be online.
Since you don't want to give me individual segment-wise revenue breakup, Rajiv, just give me a sense of when it comes to your entire revenue pie, what percentage comes from industrial segment and how much of it constitutes the decorative segment? And more importantly, what industries do you cater to? I know you just talked about that, you are restructuring your entire pipeline in that sense, doing away with the businesses not doing well or other segments which are not doing well or that they cater to. So give us a more deeper sense of which are the industries you have exposure to and what's doing well for you.
So paints, and I'll give you broad numbers, paints accounts for approximately about 63 to 65% of our portfolio. The rest comes from the industrial segment. We are a number 4 player in the paint segment at an overall level, but yeah, in the premium segment, we have a higher share, close to a number 2, in fact, in the premium segment. If you look at our other businesses, we coat any surface, and that's one thing about AkzoNobel that you must know. We coat any surface, so we coat, whether it's your phones, whether it's the white goods like refrigerators, washing machines, whether it's aeroplanes, we provide coatings for oil and gas. So we coat any surface, yeah. And structurally, if you really look at, we are seeing a bit of a comeback in the oil and gas industry, with crude slightly surging up compared to the previous years, and that's an area where we are seeing some positive movement. A bulk of it also is in the power segment. We're seeing some slight uptick there. We also are seeing, in terms of, as far as paints is concerned, as I said, repainting accounts for the bulk of our sales, and that's more done regionally. We are seeing some uptick in the tier 1, tier 2 towns. We are seeing some uptick in a few metros for us in specific. And we are also seeing some uptick in certain elements of our powder business. So, in architectural segment, etc., where the team has really been focusing. In our powder segment, as you know, we had opened a new metallic bonded powder in Thane last year, and we are seeing some good work being done by the team there. So overall, I wouldn't use the word bullish, but I'm fairly positive.
Well, let's talk about your margin picture as well. That's the one factor where you've done very well. With the raw material prices having stayed the same, is it the price mix has played out on your side, which has aided your margins?
Yes, it's a combination of both price and mix. I think the focus, very clearly articulated as a strategy when I came back, was really to say that, look, how do we get back our share in the premium segment, get the mojo back there through a combination of brand, through a combination of pricing. The industry had taken there was a price increase. We've sort of been in the forefront of it. We've also taken a marginal price increase this year because we're still seeing a bit of volatility as far as crude is concerned. We are also seeing a bit of volatility as far as titanium dioxide is concerned. It's too early to really say that. You see, the two big factors that affect the paint industry is crude and is also the currency. And you're seeing on both, you're seeing a volatility by the day, by the month. So it's very difficult for us to really predict saying that crude is stable. When we believe that crude is stable, the crude prices seem to be going up. So, we are watching it very closely. But yes, the answer is that we've got it through a combination of both price and mix. And we look forward to continuously implementing our plans to deliver return on sales of 15 by 20, which is led by these two.
Underperformance when it comes to your volume growth, because I understand that for FY19 the volume growth came in mid-single digits, whereas your peers have delivered high single to low double digits. So what's the reason?
So again, as a part of the 15 by 20, one of the things we've consciously taken is to review the businesses which are not accretive in terms of volume. So for example, if you take the paints business, right, we are very clear that our participation in putty is going to be very limited to making sure that it's available, but really not driving substantial growth in those segments. If you look at the industry from a paints perspective, post GST, what has happened is there is a lot of unorganized moving to organized, and really that growth is really coming in from the, and I think all of you've captured it. It's coming in from the economy segment and segments like putty, etc. We believe that's not where we add terrific value. We believe that where we really add value in the paints industry is really focusing on the premium part of the portfolio, where Dulux is still fairly iconic. We are trying to work on a lot of innovations there over the next 1 year and try to make sure that we get the brand at the center of the consumer from a paints perspective. As far as coatings is concerned, again, we are looking at terrific amount of value add, be it in terms of our protective coatings through our fire protection range, or be it through a metallic bonding, where we are really looking at both the architectural and certain segments that we really need to enter. So we've got a very clear plan. And my belief is that we are currently executing it as a part of our global 15 by 20. Fairly confident that India would be on course to deliver its target or its share of 15 by 20.
All right, great having you on board, Mr. Rajgopal. Thank you for giving us a sense as to what the overall demand scenario is, as well as your financial metrics in the quarter gone by. Very strong margins, and clearly that's the key takeaway from the earnings that were delivered. 1670, that's AkzoNobel on last tick.